This week on the Business Owner's Corner, I'd like to talk a little bit about cash and specifically the difference between retail CDs and brokered CDs and when either of them might make sense for you. To start off, everybody needs a little bit of cash. We've talked in previous videos quite a bit about the concept of an emergency fund, how everybody needs a little bit of cash laying around for a rainy day, both in your household accounts and in your business accounts. You may have noticed that interest rates are going up a little bit because we're in an inflationary environment. And because of that, the rate that you get on your deposits in a bank have probably gone up. Now, if you have accounts at some of the biggest national banks like Wells Fargo, Bank of America, JP Morgan Chase, those kinds of institutions are notoriously stingy with the rates that they pay you on your deposits. So if you have a lot of cash in the bank and you're wondering, hey, why am I not getting more than 0.01% on my deposits, even though interest rates are going up high on all my debts, you might be a good candidate for a CD. Now, a CD is similar to a savings account. You can walk into a bank and give them money, and they'll hold that money for you, and they'll give you a little bit of interest on it. The difference between a savings account and a CD is that a CD has that cash locked up for a certain amount of time. So you can walk into any bank and purchase what's called a retail CD. Let's say you give $1,000 to Wells Fargo and you say, I want a 3-month CD. And you're agreeing to give them the cash for 3 months. After the 3 months is up, then you can take the cash back. If in between when you purchase the CD and the 3 months when it matures, you need to pull the cash, they're going to assess a penalty. You'll get less than your $1,000 back if you have to pull the cash out before the CD matures. So when you walk into a bank and ask to purchase a CD, that's called a retail CD. Anybody can walk in off the street, give money to a bank, agree to hold it there for a certain period of time, and you'll get some interest in exchange for that. If you open a savings account, that gives you the right to withdraw the cash at any point. They'll pay you a little bit of interest, but it's probably a little bit less than what you would get in a short-term CD. So this can be a good mechanism for cash holdings for some people. I wouldn't put all of my emergency cash in a 3 or 6 or a 9-month CD because it kind of defeats the purpose of having it in the first place. Your emergency fund needs to be liquid and available to you at all times, which means that it doesn't really make sense to lock it up in a CD. That being said, you might want to take a small portion of it and lock it up in a CD. Maybe you've sold your house, you have a whole bunch of cash in your account, you're going to go travel in Europe and then buy another house when you come back next year. That could be a good reason to buy a CD that time or the maturity is timed with when you return and want to use the cash. There are all sorts of good use cases for this. What I want to introduce to everybody is the concept of a brokered CD. So from the bank's perspective, they're in the business of taking in deposits, giving you a little bit of interest on that deposit, and then lending most of those deposits out elsewhere in the financial world. They might lend it to small businesses. They might lend it to people who want to buy a house or a car. They might lend it to the US government by buying US government bonds. There are all sorts of ways that banks generate interest on the deposits they're taking in from you. One easy way for them to take in a lot of deposits at once is to issue what are called brokered CDs. So a retail CD is when you or I walk into the bank, we give them $1,000, and they give us a little bit of interest on that for a certain period of time. A brokered CD is where the bank doesn't rely on you or me walking into the local branch. They issue this out through a network of broker dealers in the financial industry. And they can sell a whole bunch of CDs using the distribution network that's already in place within the financial system. And so what this means for you and me is that if you're interested in buying a 3-month CD, the first place I would look is through your brokerage account at Fidelity or Charles Schwab or anywhere. You log into your brokerage account, navigate to the bond trading area, and look up brokered CDs. Because rather than walking into the bank and giving them that $1,000, you can simply buy one in your brokerage account from any bank that's offered in that network. And because this distribution system is more efficient for the bank, they're going to pay you more in interest than what you get through a retail CD. So that's the first place I would look. It's something that a lot of people don't know about. Not all brokerages can access the brokered CD network, but the biggest and most notorious ones can. The ones where you have an account very likely can. And all you need to do is ask for it. The benefit of this is your brokered CDs are FDIC insured, just like your deposits at other banks, presuming that the CD that you buy is part of the FDIC network. Most of them are, but you want to confirm that. And if you have cash that you want to put in CDs that exceeds the $250,000 limit, well, guess what? You can buy a $250,000 CD from bank number one, and that's FDIC insured. You can buy a second FDIC insured CD at a different bank for another 250,000. And even though they're all held in the same brokerage account, they're they're covered by the underlying banks issuing the CDs, meaning that all your CD cash would be insured by the FDIC, which after Silicon Valley Bank and the environment that we're in right now is quite important, I would say. So this is a consideration for anybody that has cash that they're trying to maximize interest on that they don't need for a little while. You have a little bit of interest rate and duration risk with this CD, just like you do in a retail CD. And all that means is that if you buy a 3-month brokered CD through your brokerage account and you need to pull the cash out before that 3 months is over and the CD matures, the CD goes away and the cash is deposited back into your account, you could be penalized by that based on how interest rates fluctuate between when you buy it and when that maturity date is. So just wanted to mention this because I think that this is a great place to store cash that you might not need for a little while that a lot of people overlook.